Welcome back. Now, inflation ticked up slightly to 2.8% in April from 2.7% previously. On a month-on-month basis, inflation edged lower to 0.3% from 0.4%. And while most economists expected inflation to remain steady at 2.7% during the period, at 2.8%, it still falls way below the SARB's inflation target range of 3 to 6%. Christie Viljoen, senior economist at PwC, joins us with his analysis of the CPI trajectory and what it suggests for interest rates moving forward. Christie, thanks so much for your time this afternoon. So as mentioned, inflation ticking up slightly to 2.8%, but I guess at 2.8%, it's nothing to be too concerned about.
No, really nothing to be too concerned about. 2.7, 2.8, those numbers are below the target range, actually. So at those levels, small changes are really not of concern. The fact that we are at such a low level, that is the good news. We've been there for quite a few months. And when we look at how, let's be honest, crazy the world is, how financial markets are up and down every day, it's an envious position, I think, for many emerging markets to be in, to see inflation at such a low level.
And I was looking at some of the factors or some of the indexes that influence inflation. And what caught my eye is the increase in beef prices, right? And I just wanted to talk about that in greater detail. Are we seeing, the challenges with climate change coming into play on that front?
Look, food prices are always quite volatile, and we see the pressure there first. And we've seen of late some unseasonable weather across various parts of the country. Mostly it's been excessive rain. And that obviously impacts the way that farms manage their crops, manage their animals, the availability of food, but also disruption to transport, being able to transport goods, animals, etc., to markets, for example. Over the long term, we've got the question about climate change, and it's something that over the past week or two, we've seen a few reports on where farmers are saying, listen, the weather changes, weather patterns are changing. We're seeing cooler summers, warmer winters, etc. That obviously impacts the way rain is falling. So for us, it's a concern in the short term when we think of food security right now, but also over the long term, the impact that climate change could have on the cost of producing farm products, and obviously then the cost of just feeding the South African household.
And now, talking about what we could possibly see from the MPC next week, what are your expectations, Christie? I know there are some external risks, those global risks, but when looking at the data, I mean, it suggests that there is room to cut rates.
So as we start with low inflation, that's obviously a nice result from a relatively strong rand exchange rate. It's also helped us bring down fuel prices. So at the moment, inflation is looking good. The Reserve Bank decides on interest rates based on their forecasts. So they will need to have a favorable view on where the rand is going, where fuel prices are going, etc., etc. So from that perspective, I'd say there's room to cut interest rates a bit more. But the big uncertain factor right now is, let's call it this global geopolitical situation, which in South Africa's case also, we are very much in the midst of trying to determine what our trading patterns will look like going forward based on what the US is doing with tariffs. And those uncertainties could, at any given week or month, result in, for example, the US dollar surging stronger or dropping much weaker, and the rand then following that type of pattern. So we obviously don't know where the rand is going to be in 1 month, 3 months, 6 months. The Reserve Bank needs to stay cautious, err on the side of caution. So they might even say to us, listen, we know inflation is low, we know the outlook is good, but we have to please just be cautious. So rather act later than sooner. And that's probably what they're going to be going for. They'd rather say, let's just keep an eye on this a bit more. Obviously, depending on developments today in Washington, where our president is to meet the US president, let's wait and see. That might be the that they put forth when they decide on interest rates again.
Another issue that's been top of mind, Christie, is that inflation target framework. We've had Governor Kganyago pushing for a lower target for quite some time, and Deputy Finance Minister David Masondo last week mentioned that Treasury and the SARB are close to making that announcement. Some expect that announcement to even be made today at the budget. So yes, this does boost the rand and, improve South Africa's competitiveness, but it does come at the expense of the household. We just talked about how the SARB could still be playing, a wait and see approach when it comes to cutting rates.
Yes, the work by the government and the central bank on the inflation target has been coming along for quite a few years, and we've been very close for quite some time. We even expected in Feb with the first budget to maybe get news about this. So expecting it to be in the budget speech is quite reasonable. It is something that the inflation target is determined by the National Treasury in cooperation with the central bank, but that's where the decision lies. So it makes sense to maybe expect it today. Maybe there's just too much happening today and they leave it for the interest rate announcement. They might even say that we will be announcing something substantial 1 or 2 months from now. So they need to build those expectations. For ordinary households, it could mean that this low inflation environment could be sort of maintained by keeping interest rates where they are right now. Ideally, most South Africans would like to see interest rates cut, but if this lower target comes in, it might mean that we've got an end to interest rate cuts for the moment.
And just a cheeky question before I let you go, a speculative one, please indulge me. Do you think that the SARB has hit pause on rate cuts because the MPC was perhaps working with a inflation target that was lower, that was already discussed with the Treasury? Because, yes, looking at those international risks that are still there, they are there, but we have seen a very resilient rand. We have seen inflation really low, really pointing to there being room to at least cut rates once or twice.
Well, I think that question about have they been looking at inflation with one target but also another target in mind, I would like to believe the answer is no, because the central bank is working with a specific framework, a specific target. But we have to keep in mind that they are doing different scenarios probably. They are doing forecasts based on the current target and probably the future target as well. There's various different scenarios that the Reserve Bank looks at when they think about where interest rates are going. And I think a new target would be a different scenario that they will be incorporating. So it is in the back of their minds. I think at the moment we're sticking with what we have, but we cannot discount that at least there's some thinking about what a lower target would mean for interest rates right now.
All right, Chrissy, let's leave it there. Thanks so much for your time and just unpacking that inflation print and what it suggests for monetary policy moving forward. That was Senior Economist at PwC, Christie Viljoen.